what is good, guys? Welcome back for another video, and hope you guys can see the lights. Okay, let me look it. Welcome back for another video, and today I'm going to be explaining fair value gaps, FVGs. A lot of you guys might have already heard this from like places like maybe TikTok or your YouTube or your IG, wherever. Or if you haven't heard of it, I'm going to explain to you what fair value gaps are and why they are important in your trading and how you can utilize them in your trading strategy. It doesn't mean you will change your strategy, just how you can utilize them or put them into use. Same thing as utilize. So yeah, without wasting time, let's head into the chat. Before that, if you guys like content like this, trading related content, do well to like the video, smash the subscribe button so YouTube can also recommend this video to other people that are looking for information like this, and so you can see more videos from me. Without wasting time, let's on the chat.
So this is gold, the 1 hour time frame, and today I'm going to be talking about fair value gaps. So the first thing I'm going to say is, whenever you want to use fair value gaps, just know you can use it on any time frame, right? You get any 1 hour, 5 minutes, even 1 minute, 2 hour, 4 hour, 1 day. Fair value gaps are useful and they are seen and they work on every single time frame. So let me go ahead to explain what the hell a fair value gap is. So I think I'm going to start by doing this. Okay, so let's take these rectangles as our candles, right? Let's take it as our candles. Let me make the color more bold. Okay, so let's say these rectangles are candles. I'm going to give them wicks. So you have 2 candles now. These are bullish candles going up. Okay, so let's say you have bullish candles now, and these are the wicks. These are the wicks. Let me go ahead and draw them. Okay. So a fair value gap simply is a point in the market where price has not yet come to fill up. A fair value gap is simply a point in the market where price has not yet come to fill up. And if you haven't already understood what that is, I'm still going to show you. So look at this now. Look at this. You can see this point in price. I'm going to change the color of this. Let me just put it. Don't mind the OB. Okay, you can see this point in price, right? You can see this with this buying candle, the wick reached here, price closed at this candle here, the candle opened, shot up, price started here, this candle picked this low. What am I trying to say? I'm trying to say that market did not feel these points. In this point right now, there are no wicks. I'm still going to show you this on the actual chart. This is what a fair value gap is. Fair value gap, FVG. That is a fair value gap. Point in the market that is not covered by wicks, which price is most likely going to feel, maybe not now, but surely later in the future. Price is going to find its way back there. So now you know what a fair value gap is. Let's look for an example in the chart. If you remember, 3 candles. So right here you can already see the fair value gap. You can see this big candle, right? Starting from the week to this week, price hasn't filled this. And you can see price has already started filling it up to this point. What's left is just this. So this fair value gap is almost filled. That is what is left. Before price started going up, this was where the fair value gap was. But now price has gone up, almost filled the fair value gap, and is reacting to it. Fair value gaps simply, how do you use them? You use fair value gaps to know where the price or where market is most likely going to go. Use fair value gaps as confluences. You can also use it as entries even. You understand? Let me show you another good example. Look at this. When price use this big candle to shoot up, start from here to this week, you can see the big fair value gap. What the price do? Price found its way down there to sweep, break through that fair value gap, also sweep this low, found liquidity. That is a very good sign for a buy. Now, how do you actually use fair value gaps? I've showed you it on the actual chart. How do you actually use them as buyers, for buyers? Yeah, for like knowing the direction of price. As I showed you in this fair value gap, you can see what happened here. This fair value gap is a bullish fair value gap. Why? Because it's a bullish candle that made the fair value gap. What do we expect from a bullish fair value gap? We expect bullish momentum. That is, price to come here, buy from the fair value gap. But what happened? Price broke through, close below it. What does that mean? It means when the bullish fair value gaps are not being respected, the bears are in power. And if you look closely, market ended up selling. Market went up, filled a bearish fair value gap. Pay close attention. Market filled a bearish fair value gap. I'm going to show you the fair value gap I'm marking out. As you can see here, middle candle, market open here no week to this point where this week peaked before it kept going down. That is the fair value gap. Market went to the bearish fair value gap, started selling. If you know how to use fair value gaps to add to your conferences, you know, okay, the bearish fair value gap, the bullish fair value gap, market closed below it. This could have even been an entry for you to take a trade, and maybe you target the next draw on liquidity, which was here. Though in my like, if it was me, I'll target this low right here. That's a very good draw on liquidity. You can see good 1 to 2.7 risk reward, but I personally look for my FVG entries on the lower time frame. Why? Because it will give me smaller stop losses. As you can see, this stop loss is actually very huge, crazy. So now I've explained what a fair value gap is, how to use fair value gaps, how to know your buyers using the fair value gap. I've showed you when bullish fair value gaps are being disrespected, it means bears are in power. Same thing goes for selling or bearish fair value gaps. If they are being disrespected, that means bulls, buyers are in power. Now, how do you actually use fair value gap for entry? Let's break down this particular trade. This particular trade has two things: the bearish fair value gap and the breaker block. If you didn't already see it, so I don't want to put a rectangle there because there's already a rectangle, so you can see the breaker block. What is the breaker block? Another block that failed, market broke through it. Now it's using it as resistance. Okay, so let me go down to the 5 minutes. Like I said, I use my lower time frame so I can get better entries. So you can see what happened. Price found its way to the bearish fair value gap and actually spent some time there. Price spent some time there, and if you can look closely, price when price came down, bought into this 1 hour fair value gap, price left a fair value gap on the 5 minutes. Let me mark it with other block. That's not another block, that's a fair value gap. I want it to be different colored, you understand? So I hope some people will still be confused. Let me change the color. Price, I'm going to show you. This is my fair value gap right here. You can see this candle. This is where it starts. Price pushes up. This is where the candle peaks. What do we expect price? We expect price to go down, use it and buy, because it is a bullish fair value gap. But what will happen? Price broke through the bullish fair value gap. Price broke through the bullish fair value gap. What does that mean? Sellers are in power. So market ran through the bullish fair value gap, came back. The same thing that happens with breaker blocks. When market breaks it, uses it as resistance. Market broke through this fair value gap, now used it as a resistance to sell. So you can see how you can actually use fair value gaps on the higher time frame with the lower time frame for confirmation entries. And this now, instead of that huge stop loss, you use a smaller stop loss with that same take profits. Crazy risk reward. So you can see how easy this is. Just you need to take time, work on your backtesting, really understand fair value gaps. I've explained what they are, how to use them, and also when to use them for entries with the time frames. You guys found the video helpful, which I am very sure a lot of you guys will. If you watch this far, make sure you hit the like button, subscribe to the video, and I will see you guys in the next one.